Hello, everyone out there in podcast land. Welcome back to Adventure Capital, where we not only discuss the entrepreneurial journeys and adventures with founders who have raised capital on Wefunder, but also the different resource providers and mentors helping founders along the way. Huzzah! In this interview, we chat with Gale Wilkinson and Justin Gordon of Vitalize VC, a seed stage venture fund and angel community investing in the work revolution. So that's people first, data-driven, category-defining business in the future of work. Before we get on with the podcast, we're required to let everyone know that anything we say here should not be interpreted as investment advice, recommendations, or soliciting investments in any company. All companies raising on Wefunder are given an equal opportunity to participate in the podcast based on the progress of their campaign. Wefunder gang, take it away.
Hey everybody, welcome to this episode of Adventure Capital. We're here today with Gale Wilkinson and Justin Gordon of Vitalize VC, one of our partners who we've been working with for, I guess, a little more than a year now. It's been a while. We're super stoked to talk to you guys. It's a little bit of a different episode than our typical founder interview, and I think it'll be really fun. So yeah, to kick us off, Gale, I think this one is maybe best suited for you. Could you give us a brief overview of Vitalize VC?
Yes. So at Vitalize, we are a early stage VC firm. We've got a fund and an angel community, and we invest in what we call the work revolution. So we define that as people first, data-driven, really big ideas that transform how work is done today. So think of future of work with a data-driven lens and really, really big game-changing stuff.
Can you give us an example, portfolio company or?
Yeah. Our first check out of our current fund was into a company called Cloud Eagle. They are an enterprise software solution to help those enterprises manage their software subscriptions across the company. And it's done in a data-driven way so that firms can really understand, how can I not only get better and more efficient about how I'm leveraging software internally, but how do I benchmark that versus the comp to make sure that I'm thinking about the right tools and thinking about spending on technology in the right ways to more effectively achieve my goals.
Super cool. Gale, what is your background? And Justin, would love to hear your background as well. How did you guys come to start Vitalize?
So Vitalize was born in 2017. Our first fund was a vintage of 2018. We're on our second fund now, and I've been in VC now for about 10 years. I started a firm called Irish Angels back in 2012. So I've done 125 plus deals in the last 10 years. And Justin is an instrumental part of our team. He's got a great background and does all of our marketing. So very, very thrilled that he decided to join us.
Yeah, I got my start in content marketing about a decade ago, playing with my own different businesses, starting in the fitness business and really getting clients through blogging. That's kind of originally how I got everything started. And then how I jumped over to Vitalize eventually. I was doing a podcast, still doing it, called Just Go Grind. Interviewed Gale in episode 240 of the podcast. I was off of a cold DM on Twitter. Right. Ended up having a great episode with her and then hearing more about the work Vitalize was doing, her vision for the future. And then from that, ended up joining after she posted a position for partially to help launch this angel community, which we're going to get into, as well as the marketing side of everything with Vitalize. And I was doing the podcast daily at the time. And originally I just retweeted the post Gale had about the position to my network. I was like, this is great for everyone else. But then a week later, I was like, okay, this daily podcast grind is crazy. Joining a venture firm sounds fun with the unique team we had in place. And so I joined, and we've been off to the races since in January of 2021.
Justin, I heard a rumor that the most listened to ever Just Go Grind episode was the one where you interviewed Jonny Price from Wefunder. Is that true? That's what I heard. Gale, I didn't appreciate the volume of your laughter there. I take offense at how hard you laughed at that suggestion.
I can neither confirm nor deny the download numbers of any episode, except for what's already publicly available. I will say Johnny's episode was easily top 329.
Wow. Ouch, guys. I want to.
Honey, you got to get a better microphone. That's the issue.
That's the issue.
I want to call out.
That's the only issue.
We won't publish the video, but I need to call out that Justin has a state-of-the-art microphone, as you can hear in his voice, and Gale has a bedazzled, sparkly microphone. Sound, I will say, is equally as good.
It is very sparkly.
Kayla's
like
dazzling us with her microphone as if we're watching a disco ball rotate on her screen right now. But I was actually, after I interviewed with Justin on the podcast, I was actually, I don't know if you know this, Gail, but I was like, Nick, we got to hire this guy. He's amazing. And then sadly, he went to Vitalize, sadly from a Wefunder perspective. But
You're that, Justin. Just in the nick of time.
Yeah, just in the nick of time. Take us back to 2012 when you got into venture at Irish Angels, which is a Notre Dame connection, right? But how did you embark on your career in venture a decade ago?
I was an accidental VC. I had started 2 businesses prior to that, both of which failed. And I was looking into lots of entrepreneurial endeavors. Right as I finished business school in 2012, one of the options on the table was to start Irish Angels. And I randomly had 3 months of loan money left. And so I told the board members that had approached me to be the founding director, hey, if we can do this in 3 months and find 40 people to agree to join and start to invest, then I can eke by, make it happen. And it worked. And so after we started the organization in 2012, I had a lot to learn. I had to figure out what is due diligence and how do we do it and how do we build our network and how do we do deals and how do we just start this big flywheel. So it's been really cool looking back over 10 years. It's been quite the trajectory, both within Irish Angels and then also within Vitalize.
For sure. Yeah, that's one of the things I wanted to dig into because Vitalize stands out quite a lot from like traditional VC. I'd love for you to kind of elaborate on that evolution from when you first started to what Vitalize is today.
Yeah, what we learned when our team was running Vitalize and Irish Angels together is that there is magic in having that model of a fund combined with an angel network. And I think the reason is because each of them serve a different purpose that drives huge value for founders. So a fund has guaranteed committed capital and it can move really quickly. And then an angel community has a bunch of people who really want to roll up their sleeves. And these are some of the best investors in terms of adding value to the companies. And we wanted to take that dual model, which we know firsthand works very well, and combine it in a more focused way. So what we've also seen happening in the last several years, which is very different than in 2012 when I first started investing, there's so many more capital sources today that our thesis at Vitalize is that we have to be extremely focused. We have to have a really strong brand. We have to leverage content and community to truly help founders find us and to help other investors think of us and to help, once again, that flywheel of ensuring that we're getting into the best deals when there's so many places to look today. So today's model of the fund and the angel community are focused on the same thing. It's just that the angel network can invest slightly earlier than what the fund does. And the fund is focused primarily on seed stage investing.
Got it. Can you talk a little more about how you're working with Wefunder? Why did you have the idea in the first place to partner between Vitalize and Wefunder? And I guess it's an extension of what you're talking about. There's the VC fund, the angel network, and now there's a lower barrier to entry to being an angel. And so you can have more angels participating. But what was the thinking there and the impetus? And then also, how is that working mechanically?
Yeah, we had looked at a lot of different models when we were kind of researching for this. So when I started back in January 2021, basically the idea was how do we democratize, get more access to startup investing. And we're trying to figure out a model where we could allow non-accredited investors as well as accredited investors. And so we researched pretty much everything, talking to investors, looking at SEC regulations, what workarounds can we have? Should we have everyone as their own little fund? But then we talked to more and more people. They want to invest individually. So we were trying to figure out different ways to go about allowing non-accredited, which is the real unlock in terms of capital, because there have been other angel groups that we know before that allowed accredited investors. That's been done before. With doing it a little bit differently and opening up access, we had to figure out another way. And so I honestly, serendipitously, knowing Jonny from before, from previous with the podcast, I already had a Wefunder in mind, like, hey, we should leverage crowdfunding. Can we pull this off with crowdfunding? What would that look like logistically? And so we were trying to figure out that route, if we go crowdfunding, what that might look like. And for us, what we always want to do from the beginning was make it as easy as possible for founders and also bring enough value for investors. And would they be okay with that? And so when we eventually decided to go Reg CF and go this route, working then, with you guys at Wefunder, with the Wefunder team, and having a way where we could do it, where we have some customization in terms of our community needs specifically. So working with you guys hand in hand was really the only way we would be able to do it. I don't think we would be able to do it if we weren't working hand in hand with the team on any customizations we need, anything in particular to make it easier for our founders. And so that's what we ended up launching with back in privately. We launched last year in 2021 in like May or June, and then publicly in September of last year. And so doing everything through the Wefunder platform on the back end, powering it. Our investors can go there, go through everything. Our founders, same thing. We have a bunch of docs and everything we created ourselves in Notion and different templates that showcase our founders walking through all the steps that are needed. There's a lot of docs that Wefunder has as well, but just to make it easy for our founders, we've kind of gone through that process and got a number of deals already so far, bringing in more companies every month to showcase to our investors, and also having more founders come in every month pitching our community, all powered by Wefunder on the back end.
I love it. And you guys do an amazing job with that. You've really pushed us on that, which I love, Caroline as well, right? It's like, hey, how do we make this easier for founders? What can we do? Like, how can we just lower the lift for founders? It's actually been really eye-opening and cool for me to see like just the lengths that you guys go to just make this as easy as possible for founders. One thing I'm really curious to talk about later is impact on early stage of recent market dynamics. So let's put a pin in that for now, but I'm still curious, like, why did you want to let unaccredited investors participate here? Why not just stick with the accredited investor angel network?
Well, Jonny, I can answer this in many different ways, but at the end of the day, I encourage everybody to think about imagining the time when you retire. So you're 50, if you're lucky, or 60 or 70, or whenever you want to stop working, and you look back on your life and what did you accomplish? And we hope everyone has wild success, but what's the impact that you want to leave on this world? And after I've been in venture for 10 years, the honest truth is that the number of underrepresented founders getting cash is not changing much. The percentage of dollars going to underrepresented groups is not changing much.
You tweeted that the other day.
Yeah. And I know firsthand as an underrepresented fund manager raising capital, I walk into a room and I'm assumed incompetent until I prove otherwise. And it's really unfortunate. So how do we change this huge systemic problem that we have today? It's a legacy industry and it's an access problem. So we need to increase access to the asset class. If I'm retiring in the future and I look back, like I hope that I help thousands and thousands and tens of thousands of people write their first checks. And I hope a lot of those people, this is the first time that they can access the asset class. So by allowing everybody to participate, what we're doing is reducing hurdles, we're reducing barriers. We've consciously created a program that is way less expensive than others out there because we want people to be able to sit at the table, to hear the conversations, to learn the vernacular, to actually get out their checkbook and write their first check. It is just like going to a gym. And you have to do reps to actually learn it. And when we have high buy-ins, when we have huge membership fees, when we have the accredited status as a hurdle, a lot of people can't even access it. So it was really important to us from an impact perspective to do this. But on the business side, it's also really smart because we're tapping into a new group of people who are extremely talented and underutilized because they're not in some of the networks right now that are being tapped by founders and VCs. So it unlocks tremendous value for our portfolio companies in terms of product feedback and especially customer connections from a new group.
I think just to dive a little bit deeper on that too, if you look at everything Gale said, yes, also it's just core to our entire team. I mean, if you look at people we brought in, if you look at like when I joined, that was part of the reason, like I saw this mission behind what we were doing. Same with Caroline, partner on the team as well. Like, everyone on the team understands like what we're trying to do with this. And I think if it wasn't core and important to the team, one, we wouldn't have the team we have right now. And two, we wouldn't put so much effort and work into making this happen because it is admittedly a struggle at times because it's something that's so new that there's an education piece on what is angel investing. There's education piece on what is Vitalize Angel. There's just so much that we have to do on the front end because of the fact that it's new. But to Gale's point, even looking at a good example we had someone in the community early on who they had maybe made like 150K multiple years in a row, still weren't accredited because they're not at 200K a year for 3 years. And so like that level of wealth and everything they can't even invest is absurd. And so once you see more and more examples of that again and again and again, you think about how much capital could be unlocked going to underrepresented founders, going to founders, all locations and geographies, et cetera. So there's so much that could happen from this. And so it's core to what we do, what we believe in. And if it was easy, everyone would do it. So it's not easy. We're trying to make something new happen. That's why we're doing it.
For sure. Yeah, I love that. And I think the mission alignment is spot on with Wefunder's mission. And yeah, that's a huge focus for us is educating investors as well as founders, speaking like a human so that it's super accessible in terms of education. And it's really cool to find that, you guys are also so committed to this. And yeah, I'm curious if you can maybe give us a little bit of a look into the Vitalize Angels, like demographics, I guess, of your community, like your typical Vitalize Angels member and how they get in touch with you guys. Like what's kind of the customer journey for them?
So in terms of the makeup of the group, 350 people. It's a mix of big tech. So LinkedIn and Facebook and Uber and many, many companies like that have middle level managers. And we've got a lot of founders. So these are founders who are raising seed, A, B, kind of all across the chain. We've got service providers, we have corporate, we have small business owners, we have other investors that have joined the group because they love the mission. So it's actually from a functional and an industry perspective, extremely diverse. And then when we look at the demographics of the group, the intersection is 70% underrepresented check writers. So that includes women, people of color, LGBTQ+. And, we can dive into that further, but it was important to us to have at least 50% underrepresented check writers in the group. And we've achieved that.
I think one more thing too on that, we have almost a 50-50 split of accredited versus non-accredited. And so when we look at like how this community has evolved and, our goal with opening up to more people, if we just had 99% accredited, obviously we're not doing that. So we do a pretty equal split right now of accredited versus non-accredited, something we're always playing with. Because if you think about doing deals every month, accredited, obviously they're going to have more capital to deploy, non-accredited have less. There's regulations on how much you can invest as a non-accredited investor in crowdfunding. So if people aren't familiar with that, it varies behind your income. It goes up depending on if you make more income. So there's those limitations as well. So all of that we have had to play with. And within that, we still have a 50-50 split roughly of accredited versus non-accredited, which we'd love to have even more on both, honestly. But something we obviously are always working on to get both, because when we actively kind of go out and try to get more people and grow this thing, the marketing and the language behind that is really to multiple separate groups. It's like we're marketing this to a whole new group of non-accredited, also to accredited who already maybe are in a group or two, but how to get access to the work revolution where we're investing in. So it's a mix of kind of all those things too.
Mm-hmm.
I love it. I love how when you were talking about the mission of why you were doing this as well, why you were committed to doing this hard thing of engaging unaccredited investors and investing in startups as well as accredited investors. It just resonates so much. As Katie said, it's like, firstly, we want to open up access so everyone gets to participate as angel investors, not just rich people on the investor side. Then secondly, we believe that if we do that, if we have more women of color in Tennessee, where I live, who get to be capital allocators, then we can get more capital flowing to women of color in Tennessee on the founder side, and trying to tackle some of those stats, which is your tweet pointed out the other day, Gale, the numbers are not moving. And then thirdly, and this is where it gets really cool, is if you can recruit this army of supporters, then hopefully that is an economic advantage to the founder, because those people are going to spend more money with them, or those people can open up doors for them, or can help them with product feedback, or whatever it is. I want to dig in on that. So are there specific anecdotal examples you've seen of your network helping the founders you guys are investing in? What are the asks that you or founders are making of the investors in your network to help out your portfolio companies?
Yeah, I could start. So we have Vic on our team is leading the platform side of Vitalize. So across all founders that we work with. And so a lot of that we've already done is making connections. So we track those. You can obviously pull the numbers, but we track number of connections we're making per company. So we're trying to have a few connections per quarter for each company, essentially. And a lot of that's to obviously other customers potentially that they could work with. There's different partners they could potentially have as well. Some of it, if they want distribution for something they're doing, we can help on our podcast, for instance. We can have them on the show to get more distribution, shout them on Twitter. Like there's a lot of different things we can do there, and obviously eventually getting them to other investors.
Are you gamifying that at all, or kind of tracking it on the investor side as well, like a leaderboard of like, hey, these investors have made the most connections, like kind of Reddit style karma points? Or
we are not that advanced yet. I think there's a lot of things we're working on with it. That's something that I think early on when we even thought about this community was how could we make it so that they are more incentivized to help. Something for now we're tracking, but we don't have that degree. Happy to take an engineer to come on and build it for us. But like something that
if anybody out there wants to work with us.
Yeah, but to that point though, Jonny, I think it's important, like if you can like operationalize, prioritize those connections, at least in some capacity, it's helpful. And we're always trying to think about that, because when you have 300 plus investors, you're looking at, okay, who does everyone know? And we, on the back end, for instance, we use Affinity for our connections and using like monitoring all of that. But it's like, how do you tap into every single person's connections? And there's way more that we can do as like an open space for that, to do even more to productize it in terms of connecting them. Because to your point, with what you're doing with community around, at Wefunder, it's like, okay, once they do invest, then how do you operationalize or productize the hundreds of investors they're going to get? You look at someone like Aaron Hamilton at Backstage Capital, when they raise money through crowdfunding, it's like, okay, how do they then operationalize that to help them in some capacity? There is a gap in some ways, figuring out that piece of it as well, which will interesting to see how that evolves, but we'll definitely be looking and thinking about that constantly.
Mm-hmm. Yeah, that's something that our CEO, Nick, has really that's, I feel like, an itch that he has, is like, how do we solve that problem? And it's hard to quantify. Like, I think one of our case studies with Mercury Bank, they found that I think they had like 2,500 investors come in their campaign. 25% of those then signed up as new customers, but that's kind of an easier pipeline, like when you can track the emails versus like the long tail of investors and like how many products they buy. Like another big raise that we did was Curl Mix, and like throughout the campaign, they were able to drive sales and activate their community in different ways, whether it's like giving a discount to their investors or whatever it was. And those people are often, customers for life. So that's kind of next phase, is how do we crack that? But yeah, I wanted to dig a little bit more into your process, because I think it's quite unique, and divulge as much as you want in terms of like how your angel group gets to interact with the deals. But I think it's super interesting in terms of how you have the founders pitch, and the community kind of gets to decide basically like which ones proceed in investing or not.
So our team looks at about 500 to 600 deals per month, and we'll have conversations with a number of them. We'll do due diligence on a handful, and then we show the two that we think have the highest likelihood of getting funding from our angel network to the Vitalize Angels group. When we show them these companies, we've done due diligence on the opportunity, because we believe that it's important for us to screen the deals and to make sure that we're sharing information with our angels. Think of it like training wheels. If I'm a new investor and I can go out and look at every single deal out there, like I may not know where to focus, but when Vitalize partners with Wefunder, what we're able to do is share our expertise and our processes with our angel members, so that they can, within a box that we've created for them, of what we think are good opportunities, then make their own decision within that set. And that seems to allow people to get started in this world. So I always suggest to new angels to pick, 2 or 3 syndicates or groups that you can join, so that you are getting that funnel and you can see good deals right off the bat without having to think about the sourcing piece, which can become really tough.
Mm-hmm.
One thing we were just talking about before we jumped on is sometimes you're hearing from founders, oh, there's concern around what will this look like to VCs? Is there some risk of adverse selection, that like we had to go to the crowd because we couldn't raise money from real investors? You're just curious to get your guys' take on how is regulation crowdfunding, how is running a community round on Wefunder now perceived? How is that trending? Like, how do we improve that? Where's that heading?
We've done 9 deals so far. So just to mention, we did our beta launch in July. We did our public launch in September. So we're tracking at about 1 a month so far. Our check size ranges from 50 to 200K. And to be honest, it's a little bit more of a challenge than we would like, because I think there's still some confusion among founders and other investors about what crowdfunding is. But what we've learned, so we've gone really deep into this space. And so we think that crowdfunding can be a huge asset to portfolio companies.
Do you still say, this is a tangent, but do you still say crowdfunding? Have we not sold you on community round yet, Gale?
Sorry. Community round. Good.
Wait, are you going to send the 25 cents for the swear jar? Are you going to send that email, or do you want to Venmo me?
Look, I can plug Wefunder because we did lots of research on many crowdfunding sites, community sites, and Wefunder definitely was the right fit for us. I know you guys are currently the market leader. I saw your data the other day, so congrats on that. Yeah, so community rounds, we believe in community. Community is part of what is going to set investors away from the pack in the future, because it's all about network, and it's all about connection, and it's all about adding value, and all that happens through community. So we very much believe that community rounds or crowdfunding rounds can add a ton of value to founders in terms of generating awareness generating positive buzz for their brand, and then hopefully lead gen on the customer side. So there's that piece of it. And then there's also just accessing a different pocket of capital. Mm-hmm. So having a diversified round of some VCs, some angels, and a community round or a crowdfunding round, it's actually really smart for founders to think about early on. And if it's done right and you're working with the right partners, whether that's Wefunder as the actual platform or Vitalize as, we're kind of like a sponsor or a champion. We hold hands with the founder as they go through the process, because we are not the broker of record. In fact, we don't charge a fee or a carry in what we do. We just very much believe it's an important part of our thesis at Vitalize, and we get value because the founders can then work with our fund later. But if you really know who to work with, it can be a huge value add for founders.
Yeah. One more important thing on that, and talk about, the perception of VCs and everything else around this. I think the most important note for us, at least, is like this launched publicly in September. We're recording this in June of the next year. We haven't even had time for them to raise their next round of funding from the companies we've invested in. Mm-hmm. So right now, it's all, obviously there's some hesitation from other VCs or founders are saying things, whatever. And like, we've obviously done deals. So we've been able to do this. And clearly companies have raised through Wefunder as well. But once we get farther along, where we see that, for instance, Vitalize Fund invests in these companies in their next round, the validation that gets from that, where we say, yeah, we've invested in these companies in the next round. We co-invested with these VCs in the next round. Like, that makes it way easier than it's all kind of up in the air. Like, will they be good companies or not? We don't know until they are a good company. We have obviously have a lot of diligence we do on the companies themselves to figure out the best ones that we can bring in at the pre-seed. But until they get to the next round, it's also hard to tell that story completely. It's not a closed loop yet until we have that first company that we invest in out of the fund as well. So that will be helpful in terms of telling the story of the prestige or whatever you want to say around community rounds or crowdfunding, is being able to invest in those companies later on and have this track record of doing that over and over again. And that just takes time for them to continue to grow their companies and get to that point of them raising their next round. So once we do that, it will be quite exciting as well.
Yeah, I love that. I kind of look to the future, right? And it's like, as you say, just started working on this in September, so it's only 9 months old, right? The rule changes to Reg CF were 15 months ago, increasing the cap from $1 million to $5 million. SPV is testing the waters, which allows us now to raise money quickly. Like, you guys would never have worked with us in a world where the founder needed to do financials before they could even like spin up a Wefunder page, right? And that was 15 months ago. And then there's like the Mercuries and the Replets and the Levels that are raising $5 million in a day. There's a small number of those, but that number is now starting to grow quickly. And then one other thing for me around the trend lines here, and this is going back to the question I put a pin in earlier. My thesis is that in 2021, founders had so many more options around, raising from early stage VCs. And so it's just, whatever your model is, right? Whether you're a community round platform like Wefunder, or whether you're an early stage VC, there's just more competition. It's harder to persuade the founder to go with you because there's so many more investors throwing money at early stage founders. My thesis is that in 2022, as kind of early stage venture probably cools off. I actually don't have any data on that just yet. I'm curious if you guys do. But like, if that cools off, then Wefunder community rounds will actually be relatively more interesting to a higher percentage of founders. And so we may actually be counter-cyclical. Curious on, firstly, your guys' take on early stage venture and what you're seeing in the market. And then also whether you agree that if it is cooling down, that might actually mean that, more founders are going to use Wefunder in the coming months.
Yeah, there's not a lot of hard data yet in terms of what the pullback looks like. What we do know is at the later stage, so think C, D, E,
right.
These are all growth rounds. We definitely know those are pulling back.
Right.
And that's a good thing because that's really the part of our industry that's been really inflated in the last couple of years. The one interesting thing about this time period is that so much VC dry powder was raised in the last 2 to 3 years that
right.
For companies that are raising now that are doing well, they're growing, they're, not burning cash in crazy ways. So they're somewhat capital efficient. Like, they're going to have no problems raising VC because there once again tons of dry powder out there. My hypothesis at the early stage is that we will see a pullback a little bit, but we're not going to see nearly what the growth stage is seeing. But that's a good thing. It's not really that the early stage needs a reset. It was that the growth stage needed a reset. Where we are seeing impact at the early stage is in a couple places. So one, Valuations have fallen in this cycle much faster than we've ever seen before. And I think it's because there's a blurring of lines between the public and the private markets. And so it trickled through so fast. Some VCs I've talked to are seeing up to 40% price decreases on the valuations. I'm seeing more like 20 to 40%.
At seed stage.
This is at seed stage, right? And that's actually a good thing. It's a really good thing for community rounds. And it's a really good thing for early stage investors and angels, because it's a great time to invest. We're finally seeing a little bit of a correction in terms of the pricing. So that's good news. One of the things that we're seeing that's not great news for founders is if you are not hitting your milestones, there is going to be not as much bridge capital access for these founders as we saw in the last 2 to 3 years. So if you're kind of flatlining, maybe your existings would have come in and thrown you a lifeline last time. That may or may not happen today. And if you get any new investors that are interested, they're probably going to want to do a down round. So there's going to be a lot of pain that founders feel. This actually will probably be a benefit for you guys when you start to see later stage companies. I would think Series A, B, C plus that are, maybe their numbers are okay, but they're not the best. They may decide that crowdfunding is a good opportunity as they're kind of righting the ship on their end.
Yeah, super interesting dynamic, and we'll see how it ends up shaking out. I'm curious. I think this is actually a good segue into some of the questions that we ask everyone who comes on the podcast at the end. So I'd love to know both from you guys your best piece of advice for a founder, probably pertaining to navigating the macro environment right now.
It's hard to even think about what advice to get. I guess it depends on what stage they're at in the company, everything with that as well. I think, Gale,
Justin, your best advice for founders is probably listen to the Just Go Grind episode with Jonny Price from Wefunder.
I mean,
that's
that would be
probably
great.
number one advice.
My overall advice, and I know you mentioned, you prefaced it with like the time in the market, but I'll say my advice I thought about previously was going to be around building relationships before you need them. So regardless of what that is, if you're fundraising, building relationships before you need them in the next round, for instance, I know I've talked to a lot of founders who have done that in a great way. Their fundraise ends up being, weeks shorter than a normal fundraise would be, for instance. Obviously the market's a little bit different, so that changes things. Same with founders who have not raised yet. If you're trying to go completely cold into fundraising, it's much more challenging than if you've already started to interact with, get feedback on, et cetera, with those. So my one thing would be building relationships before you need them, because I kind of have carried, I think, all the founders I've talked to in their careers as well. So I'll go with that.
My advice is to always listen to your intuition and be authentic to yourself, irrespective of what you're trying to figure out. Just yesterday, I was talking to one of the founders that we backed at the pre-seed stage, and he was very worried about when he should be raising his next round and what that looks like. And he's sensing a lot of fear in this market. And I said, hey, just run your course, focus on the authentic path that you have in front of you in terms of getting your products launched, continue to iterate on that based on what your customers are telling you, figure out how to make revenue and do that in a repeatable way. And just stay in that lane and don't worry about the crazy, scary notes that are flying around and, all this uncertainty, because market cycles are going to happen. But the best founders, the strongest operators, they listen to their intuition and they stay authentic to the path in front of them instead of getting caught up in all the noise. And when we invest at Vitalize, we're really trying to find those operators that can continue to execute even when stuff happens. Because as you guys know, that's very common. There's always going to be something really hard in this game. So we've got to listen to what that gut says.
Follow up on that. How do you, what if the data is clashing with your gut?
Jonny, that's a hard one. Well, look, the way that I work with founders is if they're facing this example, hey, I have data that shows me this, but I feel like I should do this other thing. I would ask why. And if they have a really good reason to go against what data is showing, then yes, they should try that. Now, hopefully they have other data that supports what they want to do, because otherwise I would start to question their sanity. But yeah.
Yeah.
I think even taking a step back with that too. I mean, obviously we're assuming we're talking, I guess I'm kind of assuming we're talking about venture-backed founders. I think even taking a step back from that, do you even want to build a venture-backed company before you get started with all this? Because we hear from a lot of different founders, and a lot of founders we talk to, it's like, you're building a lifestyle business, which is fine. You can have a great company with that way, but is it venture backable? no. And like, that's okay. And you see so many companies have done really well without being venture backed. So it is a question to even think about before you begin this whole journey. It's like going venture back comes with certain expectations. There's ways you can go it without, if you can, different sources of capital, obviously looking at these types of rounds as well, maybe different expectations depending on the types of investors. But when you're working with VCs, institutional investors, there are certain expectations that come with that. Just realize that before you get started in this whole journey. I think that's an important piece, because sometimes I've talked to founders and they're like, yeah, I didn't really know that was an option. It's like, I think we're skewed by the media, maybe seeing that as the only option. And, you only see funding announcements on TechCrunch, for instance. Totally. And so, those types of things have to be thought about. To Gale's point of intuition, even before you get started, what type of company do you want to build? Does it require venture capital? Are you able to get to that scale needed for VCs to invest? And I think Gale mentioned, but like, getting like a 30x return, for instance, for a VC, like, are you getting to that level or not? And if that's the game you're playing, understand that. If you're not, that's fine, but it's just a totally different game with different rules.
Totally. Yeah, great advice from both of you guys. Thanks for that. And thanks for the overall episode. We really appreciate your time. This has been super interesting. If people want to learn more about Vitalize Angels or Vitalize VC, where should they go?
VitalizeAngels.com for Vitalize Angels, all things there. It's kind of our main spot for that. And Vitalize.vc for everything on Vitalize. And then I guess we can go into like Twitter for Gale and I, Gale Force VC, Justin Gordon 212, Vitalize VC on Twitter. Those are the main spots we play in, but we also have a newsletter called Re-Vitalize, comes out every Friday. That is basically all resources for founders. We also have Vitalize podcast, which is interviewing VCs, angel investors, as well as founders. And so every week we have a new episode there, talking about a variety of different topics within that. So it could be how to get started as an angel investor. It could be advice on portfolio theory for investors. It could also just be how to build a company from a venture-backed startup founder who's done it, or is that a Series B, for instance, or is that a Series C? We've had founders on there who have raised, hundreds of millions of dollars and have billion-dollar companies, VCs who've been in the game for decades, like the full spectrum of newer and older investors as well as founders. So those are other spots as well.
And just because I know, just preempting, I know we're going to get this request from a lot of listeners here. If people want to listen to the episode where you interviewed me for the Just Go Grind podcast, where would they go to find that?
Jonny's episode on Just Go Grind, I want to see maybe 260 something. If you type in
just
Jonny
Google
Just Go Grind, you'll find it.
It's
Jonny Just Go Grind.
You should put it in the show notes for this one, Jonny.
Show notes. Yeah. We're not advanced enough to have show notes, Gale. Come on
you
now.
should have show notes.
This isn't the Vitalize podcast.
It's called SEO, search engine optimization. You know how many founders come to Just Go Grind because I have show notes? Like literally, it's insane sometimes. And if you see every funding announcement, there's a spike in that person's podcast. We're
more focused on the SEC than the SEO. But guys, this has been so fun. We are so delighted to be working with you guys. So much mission alignment. Super big fans of what you guys are doing. And yeah, thanks so much for gracing us with so much of your time this afternoon.
Thank you. Thanks, Jonny. Thanks, Katie.
Yeah, thank you guys.
Cheers, guys. Bye.
Thank you for tuning into another episode of Venture Capital. I hope you laughed, took notes, shed a tear, and most importantly, feel ready to go off on your own adventure. And remember, whenever you're ready, Wefunder's here to help. Be sure to like and leave a review, gang.